Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Wednesday the 28th of November 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Okay, let's kick off as ever with a look at the overnight changes and price moves to be aware of. And really, it's been a day of gains. Gains mostly against the dollar. The euro pushing back, gaining another 0.11% against the US currency. The Australian dollar impressively gaining 0.26% against the greenback. But also gains for the Indian rupee, up by around 0.22% against the dollar. And also the South African rand, a further 0.23% to the good for the South African rand. But interestingly, despite those gains against the dollar, its dollar index that we're going to focus on, 97.34 trading shortly before we recorded the video, and even that was slightly off of the peak from yesterday's session, but what an impressive performance that is, casting aside that 97.00 number and pressing on. Can it maintain it? It's had a nosebleed above 97 in the past. Let's see what happens today and into the rest of the week. Okay, what's on the calendar? Events that may move the markets today. A pretty active calendar and some interesting data to consider as well. So at 7 a.m. this morning we shall have GfK Consumer Confidence Survey data out of Germany for the month of December. We had some business confidence data earlier in the week, you remember, with the IFO survey. Now it's a chance for the German consumer to tell us how they feel. We will have out of the UK later today, I believe around 4:30, key bank stress test results. Really a look at the Bank of England, how they feel that UK banks will perform under duress should we have another financial downturn even. And we'll also hear from the Bank of England with its regular financial stability reports. At 9 o'clock GMT we will have ZEW survey data out of Switzerland. This is a similar survey to the one in Germany, where businesses and analysts get their chance to voice their concerns or not about the state of the Swiss economy. And that'll be followed by a 10-year bond auction out of Germany. Then at 13:30 GMT we'll cross over the Atlantic for gross domestic product for Q3 out of the States. It's a preliminary read, but nonetheless one that the market will be watching very closely after recent disappointing macro data. And we'll also have core personal and personal consumption expenditures data for the third quarter out of the US at that time as well. We then jump forward to 1500 for new home sales from the US for the month of October, and that'll be followed at 16:45 GMT by the Bank of England Governor Mark Carney speaking. And then at 1700 Jerome Powell, the Fed chair, will speak to the Economic Club of New York, and that'll take on extra significance for reasons that we'll see a little bit later on in the video. Then there's a decent break until 23:50 when we'll have foreign investment data in Japanese stocks and bonds for the week of November 23rd, and that'll be accompanied by perhaps the more important data, retail trade and retail sales data for the month of October out of Japan. Okay then, breaking news and comment that's caught my eye overnight. And first of all, White House staffer Larry Kudlow has said that Donald Trump is still open to a China trade deal, but is furious with GM over its planned restructuring. Meanwhile, President Trump was speaking to the press himself, and he told the Washington Post that he was unhappy with Fed Chair Jerome Powell, saying that he, Donald Trump, was doing deals and not being accommodated by the Fed. Meanwhile, Australian construction output has fallen by 2.8% in Q3 to 53.14 billion Australian dollars, I should say, versus forecasts for a 1% gain. Engineering and non-residential construction were the hardest hit sectors, and both of those, the output there fell quite sharply indeed. Okay, food for thought, something to take away with you into the trading day and beyond. Why not think about this? There is much debate about exactly where the US economy is in the so-called cycle. Recent macroeconomic data such as the PMIs and durable goods orders suggest that the US economy is slowing and is therefore late stage. Q3 GDP today could help to confirm or deny that. There's a very interesting graphic over here from LPL Financial that plots the course of the economic cycle, showing you the individual stages. The suggestion is that the US economy is somewhere around here, but that this late stage could continue for several years rather than sort of sharply falling and heading into an immediate recession. So GDP data today will shed some light on that. Of course, that's a lagging indicator. The PMIs and the durable goods orders are more forward looking, and they've already suggested a slowdown. Okay, please take a moment to read this risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of CFDs for you, then please do contact your Pepperstone account representative. And as I say, do take a moment to read this risk warning thoroughly. Thank you for your time.